Hello guys, how are you? On today's video we are gonna talk about something you asked me to do the other day, and is if it was possible for me to explain the strategy I shared the other day for TradingView, or to go through it and then show how it works, okay? So mainly for the settings and for the things that you might not understand properly on either on the code or in the setting panel itself. So yeah, I'm gonna go through that. As you know, I posted the other day in Spanish. And some of you asked me if it was possible for me to do it in English. As you know, my idea is to post content in English and in Spanish. And, well, all this content is going to be mainly to back up the free content I'm sharing, okay? So you will be able to find it, these videos on the YouTube channel, and then you will find it in English over this list, and then in Spanish down below, okay? Where can you access the content itself? So, as you know, I'm redesigning the website, and soon it's gonna be available all in the website, and then you will have it on resources. That's the one I'm posting for you to have it. So you will have it here, and you will have like technical alerts, market screener, algorithms itself, financial options, content for different areas that you might have interest, okay? So normally it will take you either through a post on the blog where I'm explaining that, or through straight to GitHub, okay? Normally, if it takes you straight to GitHub, means that you will have like a video back in this app, normally, okay? If I've not done it yet, I will do it in the future. But that's the main ways to get the content I'm posting, okay? So on this one, you will have the one interested only in TradingView. You will have the PineScript strategies here, and then you will have different scripts, probably in Python or another language, where we go through different topics. Okay, so Harry Brownie backtest, we backtest using zipline. Comparison toolbox, we implement statistical models to know whether or not two assets has correlation between each other and how it is in order to hedge or to do another things, okay? So it's like the toolbox 1, we will do toolbox 2, etc., okay? So as soon as the content's done, it will be there. But what is bringing us here today, it's to go through this, okay? This is the strategy I shared the other day, okay? Nothing quite special. It's like a Bollinger Bands based strategy, but some of you have doubts about how it works, so we're gonna go step by step. If you go to this link, okay, you will have it as well on the PineScript strategies, you will have it on the video content, and then on my LinkedIn, feel free to follow it there as well. You will have it there, and then you go through here, okay? So this is like a public script. It's like a basic trading engine for TradingView. And then here you have the description. As soon as I'm updating something over that script, it will be posted here. And then here, well, basically it lets you know how it works, but we're gonna see it today. You can add it to favorites, and then you will have the code itself, okay? And if you got any comment, put it here, and I'm trying to answer it for you. So once you add that to favorites, go find to your indicator, favorites, you got it here, and load it up. Once you got loaded up, you can see no data, and then people say it doesn't work. Yeah, it works, but you need to know a few things before. So basically, what you need to know before, you can read it here as well. You need to define, first of all, which kind of Bollinger Bands you're gonna trade to. First of all, you can go for the simple Bollinger Bands, okay, classic, or you can go for the Augmented Bollinger Bands. The calculation between both are slightly different, okay? I'm not gonna go too deep into the details of the technical indicator itself, but basically Bollinger Bands are calculated over a 20-period simple moving average, and then you apply a multiplier, which is standard deviations, over this moving average. You add it to get the upper band, and then you subtract it to get the lower band. The Augmented Bollinger Bands changes slightly, so the calculation of the moving average is done by an exponential moving average over the highs for the top, for the upper band, and over the lows for the lower band, okay? Depending on the asset, it might be interesting to use it or not. Today, for the example, I'm just going to go for the classics. Then, what else can you see? Here, you can see the indicator technical context, okay? So you can choose between 20 periods for the moving average, 19 or 50. It's totally up to you, okay? Depending on the asset, the time frame, the volatility, many things will impact on that, okay? Then the standard deviation you're going to apply. Again, we got the classic, is 2. If we want a wider spread, basically we add standard deviation, and we will see that this gets wider. If we go for 1, then we will see that it contracts, okay? All this change the settings of the strategy itself. I'm gonna open it a bit more, like that it's gonna be easier to see. Well, then what else can we see here? There is one, well, first of all, the basic strategy, okay? The basic strategy says that whenever we got a close below the Bollinger Band, the lower Bollinger Band, we trigger a buy order. And then whenever we want to go out of the order, of that order, it's either on the simple moving average, which goes at the middle of the channel, or we can change this by going to the opposite. Okay, so whenever we got this range, then it triggers the order. What we need to define? This strategy, it's mainly designed to work in range when the price is doing a range. Okay, so to do this bouncing, basically. Okay, how can we define that? Depending on your algorithm, it can be defined in many ways. You can add another indicators, you can add like another context, you can add many different things to put conditions over your algorithm. For me, to do it for you, it's quite difficult. So we need to define this in a very simple way, okay? Which still works, but you can add more features, okay? As said, the source code is open, so you can implement as much as you like. But how are we going to define when it's a range? So we are going to define it by the maximum spread tolerance between bands. So the difference between the upper band minus the lower band for the particular point. Why is that? Because on Bollinger, what happens is as soon as the market starts to increase the volatility, the bands expands, okay? As you can see here. So that's March 2020. And then you can see that here, the bands start to expand a lot. So here we can define if we want to trigger an order or not. Okay, so for instance, this one, you can see the band spread. So you can see the upper band is 3.1 in here, and then the lower one is on this another blue, okay? So if we go to the COVID event, we can see that we go around 300 points to 500 points, and then we are triggering orders all the way through. Okay, so that's not ideal. The ideal when you got this scenario, it's probably to implement a short-term Bollinger Band breakout to follow the trend, okay? But not on this case. So how can we define this? We can define this by closing the maximum spread. If we put 400, probably here we avoid many of these orders, okay? That's one of the security measures you got on the algorithm, okay? As said, you can define many, but that's one. Then the second would be the stop loss. You will always have in the algorithms I share, normally you always have a percentage stop loss, okay? Depending on the strategies as well, if you combine two different algorithms, you can change these kind of things. But for single algorithms, single strategies, probably it will work the better for you. So you can put your stop loss depending on your strategy, and then you can activate a trailing stop loss that we will follow the trend. Okay, so trailing stop loss as soon as the price is rising, it's going up, and then if the price goes down, the stop remains. on this level. Okay. What else can we define here? Once we define maximum spread tolerance, we can define which is going to be our entry point data source. So we can say that we would like to do an entry whenever we got a candlestick closing, okay, a candlestick closing, and then we can say, so we got a closing and then it triggers the order, or we can say that for us to trigger the order, we want the low. So this can slightly change as well, the algorithm, and then the same for the exit. So whenever we got the high touching the mid band or the upper band, it will trigger the order out, okay? So profit to band, the opposite, so from the bottom to the top, all the range, or for the bottom to the middle, half range, okay? Percentage stop loss, and then there's another feature I added in case you want it or in case you complement this algorithm with another one. It's only sell in profit. Okay, you got your market analyzed properly and you know you are in a bullish trend, and then you got define your whether or not your algorithm is going to be triggering orders. Okay, you can say okay, I only want to sell in profit, and then you can remove the stop loss, for instance. And then it changed. Okay, it changed the behavior of the algorithm. Okay, so that's mainly the things that you can play with on this particular algorithm. Okay, for you the ones to saw the statistics for the Ethereum, the one I share is this, and to be honest, was 15 minutes. Was 15 minutes. I removed the stop loss in this one, so I removed the stop loss, and I think it was a bit wider, the Bollinger Bands, or a bit lower, a bit somewhere around there. Okay, so that's the one you saw. Okay, so for instance, if you click only sell in profit, what is gonna happen is that whenever you got this condition, you're gonna be holding the position. Okay, that's why you need to define another sort of setting for you to know if you want to hold this or stop the algorithm to avoid this probably this downtrend in here. Okay, maybe maybe we got the trend line, the long trend line going here, and you can say, okay, if we got a breakout in this trend line, then we deactivate the algorithm. Okay, well guys, I think with that it's enough. I don't want to do this video quite long. The main idea was that, and then the last bit that I just forgot, for instance, because you asked me as well, if you go to Bitcoin, what is gonna happen? You see that your algorithm doesn't work. It doesn't work. Why is that? Because on your settings, you got this. Okay, this algorithm was based for stocks, indices, etc. So it was using the capital to calculate the position. Okay, for complete units of the asset. The cryptocurrency, normally you are not gonna buy a Bitcoin with $5,000 now, but you want to buy a percentage of that. This will be added on the next update, but meantime, if you want to use it, basically if you put a bigger amount for this to have cash enough to trigger orders, at least you will get the alerts. Okay, that's how it's at the moment. On the next release, I will update that to have like the percentage, the fractional not shares, units for the asset. Okay, and that's pretty much all. You got like the basic fee for crypto assets here. You got slippage as well. I mean, it's up to you. As said, you got it here. The code is totally open, so you can see where the logics, how they define, and then you can add whatever you like to play with it and to implement it. Okay, I think for me that's all. If you got any doubt, it will be it will be, I'll be happy to answer that as long as I know or I can. Either here, you can put a comment, or in the YouTube channel, or wherever you like, or you can send me an email. You go to I think in here, you can send me an email as well. So you got the email here. So it's jcjgmarket, okay, at gmail.com on this one. Or you can basically go through the website and contact. Okay. So that's all for me. In case you got any doubt, let me know. And well, that's all. Next video, probably I will share another thing. I don't know what's gonna be yet. Maybe, I don't know, how to work with the webhooks, or how to, for TradingView, for this, becoming these signals into orders. But I don't know. I will see. I will see how it's going. Okay. And then, as I said, if you got any suggestion, let me know. If you got any, well, actually, yeah, if you got any suggestion about how to improve what I share, let me know. The content, the way to explain it, whatever, and then I'm happy to do it, okay? Have a nice day, and I'll see you on the next one, guys. Thank you. Bye.